Good afternoon, ladies and gentlemen. Welcome to this webinar on the benefits of eID and trust services in the financial services sector. This is part of an eIDAS study supporting the uptake of eIDAS services by SMEs. My name is John Sharma. I'm chair of EMA, the European Association of E-Identity and Security, and I'll be the moderator for this webinar. Some housekeeping first. If you have questions, please enter them in as chat in the box on the right-hand side in the panel, and we will endeavour to answer those at the end of the webinar. We've allocated some time. Questions that we don't have time to answer, we will respond afterwards by email, and there'll also be information together with the recordings, etc. So please bear that in mind. We'll endeavour to answer all of them. So the agenda for today is a very brief introduction by myself, following by Chiara Walsh talking about the opportunities of eID and trust services for the financial sector. And then Marco Di Lucio will be providing the study cases of the implementation of trust services in the services sector, and he'll be bringing use cases. Marco is head of digital consulting at InfoCert, and Chiara Walsh is a consultant at Deloitte. So the question is, why do we need eIDAS for financial services sector? And it's all about safe and easy use of the eID and trust services across all the citizens as part of the digital single market. Particularly, eIDAS allows for the mutual recognition of notified eIDs and a single set of rules for trust services wherever you are within the EU. In general, outside of the financial sector, per se, there is no obligation for the private sector to implement eIDAS, but its use between counterparties in any form of transaction does reduce risk. Within the financial services sector, there's a number of compliance directives and regulations that actually mention eIDAS as the mechanism, and that will be described later on by Chiara. So we'll go move forward. So by implementing eIDAS, the financial services providers are able to extend their reach to all of the EU while reducing their risk, and also by conforming to the compliance regulations Europe-wide. eIDAS addresses the eID and trust services. This fourth webinar in the series, it does concentrate on an introduction to eIDs and trust services in the financial sector. The webinar after this will look at the use of benefits of eID in the online retail sector. So that will be the next webinar afterwards. So I'll hand you over to Chiara Walsh to talk about the opportunities for eID and trust services for the financial sector. Over to you, Chiara.
Okay, thank you very much, John. So good afternoon, everyone. My name is Chiara Walsh, and I'm a consultant in EU policy at Deloitte. Today, I will speak to you about the use of eID and trust services in the financial services sector. In my presentation, I will first provide a brief recap on what we mean when we speak about eID and trust services and their general benefits for SMEs. This was covered in more detail in 2 previous webinars, so after this presentation, if you would like more detail, you will find the slides and the recording of those webinars on the eIDAS for SMEs website. After this general introduction, I will then move on to the specific application of eID and trust services in the financial sector, and also present the different sources that you can consult for more information on this. So moving on to our first topic, which is eID. So eID stands for electronic identification, and put simply, it's a way to prove your identity online. eID can potentially be used for access to public services online. In this case, it's worth noting that the eIDAS regulation provides for mutual recognition of notified eIDs in all member states that provide services using eID. In other words, member states that have notified their national eID scheme to the Commission can ensure that their citizens can also use their eIDs when they're accessing public services in other member states. Regarding private services, however, using eID, the eIDAS regulation does not apply, but it is therefore voluntary for member states to open up their national eID schemes to the private sector. And this actually is encouraged, and as stated in the regulation, member states are encouraged to allow the private sector to voluntarily use a notified eID scheme for identification purposes when needed for online services. So, for example, eID could be used for declaring taxes online, accessing e-health services, or opening a bank account. So, moving on. A quick recap again on the benefits of eID, specifically for SMEs. So first of all, eID, it's secure, so it benefits from strong authentication, and it is a safeguard for SMEs and their customers when they are using an eID to interact together. It is up to date, so an eID can be revoked and more easily updated. This allows businesses to ensure that they have the latest information on their customers. It is also time saving, so this time and cost saving often go hand in hand. So as services can be completed remotely, this reduces waiting time, delivery delays, printing documents, and so on. And it's also more convenient and enjoyable for customers. Sorry, moving back. I think the slide skipped. Yeah, back. Sorry about that. Yes, we're still on this one. Okay, so time and cost saving. So reusing eID can save significant cost in identity management activities for businesses, and efficiency gains can also create savings. It's also flexible, so using eID, a private solution can be tailored to your services, and it's also convenient. So the automatic transfer of data makes transactions faster, less prone to mistakes. And for example, if a customer wants to access a particular service, they may not need to go through the process of creating an account. So this again is convenient for the customers of your business. So trust services. Trust services, they aim to increase the confidence of EU citizens and businesses when they conduct electronic transactions, particularly those that take place cross-border. Under the eIDAS regulation, there are several trust services, and you will see them in front of you represented by the 5 little figures on the screen. So the first one, electronic signature or e-signature, is an expression in electronic form of a person's agreement to the content of a document or data. And e-signature is probably the most well-known and most used of the trust services currently. Electronic timestamp or e-timestamp, which is shown by the ET. E-timestamps, they link an electronic document to a particular time, providing evidence that the document existed at that point in time. Actually, e-timestamps are rarely used as standalone solutions and are often accompanied by other trust services, especially e-signature, for example. Electronic seal, e-seal, which is shown by ESE. E-seals are similar in their function to the traditional business stamp. In this case, it's important to note that e-seals are used only by legal persons, and e-signatures are used by natural persons. So e-seals can ensure the integrity and origin of documents that originate from a business. Qualified Web Authentication Certificates, or QWACs for short, are electronic certificates that prove to your customers that your company website is trustworthy and reliable. They also ensure that the website links to the person to whom the certificate is registered. And finally, we have ERDS, which stands for Electronic Registered Delivery Service. ERDS allows users to send documents or data electronically in a secure way, and it also provides proof of sending and receipt without any tampering of the document or data along the way. So moving on to the benefits. of trust services. This is a similar slide to the one we just saw on eID, but the benefits are a little bit different. So an important benefit for trust services is accountability. So trust services really can provide proof of signatures, of sending documents, of receiving and sealing of documents. Security is again a very big benefit. So businesses can become more secure within their own processes. Time saving again. So by doing jobs remotely, and you can reduce waiting time, commuting, delivery delays, and so on. Customer experience is also a key benefit. So trust services can actually make the interaction between customers and businesses more convenient and enjoyable. Paper trail, so well, electronic paper trail. So trust services can also help improve the way that documents are tracked, thinking especially here about ERDS, e-timestamp, even to see that a document has existed at a certain point, that it hasn't been changed, and that it has been sent and not tampered with. So there's a lot of tracking that can be done there. And trust, which is in the name. So trust services, they of course build trust and confidence in the online world and cross-border transactions. An important note there as well is that they can be used cross-border. So this is also one of the main benefits of the eIDAS regulation. Yes, when we speak about trust services, we often speak about qualified or non-qualified trust services. So what exactly do we mean? So the term qualified is used for those trust service providers that can prove that the trust services that they provide fulfill the requirements laid down in the eIDAS regulation. And this can be identified by the EU trust mark, which is the little blue lock with the tick that you see on the screen. This is, of course, optional, so it's not all the time that a qualified trust service provider would have this trust mark indicated on their website or wherever else. Non-qualified trust services are not necessarily less trustworthy, and they often provide solutions that are similar to those of qualified providers, but they may not be qualified because they haven't yet gone through the process that would indicate that their services comply with the requirements under the regulation. And so if you want to find a trust service provider anywhere in the EU, you can access the Trusted List browser, or TL browser for short, which is shown by the URL on your screen. So moving on to the topic of today, which is the financial services sector. So just to give you a little bit of context of what we are speaking about. So the financial services sector, as we know it, is going through some changes, especially in terms of digitalization. Recent statistics show that only 1 out of 9 financial transactions in Europe is now paper-based. Deloitte has also identified a number of key trends in the outlook for financial services, which include those that are shown by the icons on the screen in front of you. So first of all, work is evolving, banks are becoming more automated, and therefore we can see that the workforce in financial services may evolve now and into the future. Regulatory recalibration is a key trend. We know that several new instruments such as the Payment Services Directive, anti-money laundering, GDPR and so on will affect the industry, and business strategy should now be aligned with compliance requirements. Cyber risk is also an important consideration for the financial sector, with greater interconnectedness in the banking ecosystem and new technologies. It is recognized that staying ahead of these changing business needs and addressing threats is crucial going forward. Regarding technology management, modernization is coming out as a key IT trend also in the financial sector. So it is definitely a challenge for the financial sector to become more agile and modernize their infrastructure. One of the key trends, I think we would all agree, is fintechs, which continue to lead the innovation in the banking sector. They're sharpening their focus on customer experience. But of course, it's still to be foreseen, but fintechs may represent a change in the banking and financial ecosystem overall. And finally, customer experience is a key trend. Although the industry has undoubtedly improved in many ways in the last couple of decades, there is still more that can be done regarding customer centricity, and technology, potentially eID, can be part of the solution. So moving on to the eID's potential for financial services. As you can see on the slide, all of the trust services have some horizontal benefits. Namely, they can promote a paperless and electronic process in the financial sector, so such as paper-free credit contracts. There's also more efficient authentication, contracting and signing processes that can be used throughout any sort of transaction in this sector. More precisely, however, in the area of customer onboarding, QACs, so the Qualified Web Authentication Certificates, can increase consumer trust and help avoid online phishing. eID can provide trusted verification of a client's identity and financial records, compliance with Know Your Customer and anti-money laundering requirements, which are also key topics as well in this sector. So regarding customer relationship management, e-signature can allow for remote signing of contractual agreements with more streamlined processes. E-timestamps can provide certification of the time of signing or sealing contractual agreements, also enhance document tracking and provide greater accountability. eRDS, so Electronic Registered Delivery Service, can allow for secure online sharing of contractual agreements with all parties involved in a transaction, which would reduce the amount of times that parties would have to meet physically, therefore leading to more operational efficiency and increased trust. And finally, eID allows customers to open their bank accounts remotely and also access their bank account remotely. So let's have a look now at a potential scenario in the financial services sector. If we can move on, using eID and trust services. So imagine that you are a financial services company based in Denmark. You have a potential new client in the Netherlands. They wish to contract your portfolio management services. So the first step in onboarding your client is to identify who they are. So by using their eID, you are able to verify their identity and carry out checks on their financial records. So this would help stay in line with the due diligence and compliance with Know Your Customer and anti-money laundering requirements. In the second step, the company wants to send the contract to the client, and for this they can use the eRDS, so Electronic Registered Delivery Service. This will reduce the time for document exchange, so it doesn't have to be sent physically, and it also can protect against the loss, theft or damage or alterations to the documents. In the third step, once the client receives the documents, they would have to sign their contract. So for this, they can use an e-signature. This also reduces the time and the costs that are spent by not having to meet physically to do this. And finally, you as the company can sign and seal the contract using your own e-signature and the company's e-seal. Also, the documents you can apply an e-timestamp to the document and send it back to the client. Again, this can enhance the document tracking and will increase the trust in the origin of the documents. So this example is one example that we actually have online on the eIDAS for SMEs website. This is one of the infographics, and there are several other infographics that you can download if you would like to see more. There are also other sectors that are addressed, which are the online retail sector, transport and professional services sector. You will see in the URL just at the bottom there where the infographics are available, but the slides will be shared after the webinar, so don't try and rush to take down the entire address. Regarding other materials that are available online, we also have a checklist on the website. So the checklist allows you to go through a number of questions about your business needs and can help you identify potential trust services that could be relevant for you. So again, you can visit it through the URL there. The interactive tool is also available on the website, and this actually allows you to try out eID solutions in a simulated environment based on some use cases. The tool also provides examples of the applications of eID solutions in the different sectors as well that I previously mentioned. For a bit more information, but still in a concise manner, there's also an SME guidebook that can be downloaded from the website. Available also, as you can see. And finally, the eID for SME web pages themselves provide some useful information to help you learn about the potential for eID and trust services for your business. We're also quite active as well on social media. So you see there the Twitter handle and also the Facebook group, Digital Single Market. Facebook profile, sorry. Moving on. And of course, if you would like to join the discussion on this, you can visit the eID Observatory, which is a virtual community of stakeholders that come together to discuss issues around eID. It's open to everyone, so businesses, individuals, public administration. So if this is something you're interested in, don't hesitate to go onto the observatory and get involved in some of the discussions there. So that's all from me. Thank you very much. And I will be happy to take any questions that you have at the end of the webinar. Thank you.
So, hi everybody. I'm Marco Di Luzio from Infocert. I'm the head of digital consulting. Thanks to the participant to this webinar. I would like to bring you our vision as an operator on some such a case that we have on implementing eID solution. And I would like to show which are the benefits and the kind of innovation that are enabled by the regulation. First of all, I would like to presenting you what's happening on the banking sector. Everyone knows that it's a sector where there are challenges and pains that came from the regulation. There are a lot of regulation coming that ask for new processes, a new way to manage information and customer life cycle. So the sector became more complex. There's a challenge due to the fact that customer behavior is asking for smart services and is asking to have a smarter customer experience. There is a competitive landscape where there are other player coming with a different business model and different way to provide services. Just take an example, payments and transactions now are managed by fintech, and they are changing the way we think to benefit from the banking services. And the transaction management becomes more and more a commodity. So there is a push for innovate services and finding a way to provide services to customers. So the digitalization is a rising burden in the customer experience, and all of us compare how the service is on other sector of the sharing economy, comparing the service we receive from the banking sector, where for sure we have a more need for trust and liability on the process we are managing. So all these facts, let me say, are creating this challenge for the financial sector. It's interesting that our regulation can enable, can help banks and financial institutions to innovate their services. Thanks to the eID, we have all the trust services coming from the QTSP, Qualified Trust Service Provider, that can enable a new way to manage these services, and that could be added to all the know your customer procedure. What it means that we have two dimensions. In one side, the trust. I need the identity of the customer. I need the trust and liability of the process. In the other hands, I have all the know your customer information that are usually held and owned by the bank. We think as an operator, as a certification authority, that adding these two dimensions that are enabled by the eIDAS regulation, we can have and bring a strong innovation on the financial sector. And these are the cases that I would like to present to you. This approach is present on literature and is called DCIM, Digital Customer Identity Management. So it means managing the identity of the customer and managing the information around this identity. So just to take the first example, the first such a story I would like to present is about the instant lending for a leading European group, where we use the services coming from eIDAS to enable a new way to disburse lending in an instant way. So what it means that all the checks, control, and verify of the identity that usually takes 13 days have been done leveraging the eIDAS services to re-engineer the personal loan process. So we design it to be processed fully digital and a new way to manage the lending process. So we enable this thanks to the qualified e-signature, and we perform an enrollment and identification of the process. And thanks to this, we reach an instant credit scoring of the customer. So just to present you the phases of the process, there is the form filling. So we collect all the information from the customer. We perform the identification of the customer. So we have a trusted identity thanks to whom we can enroll a qualified digital signature certificate. In the meantime, runtime, the bank have all the information to perform his credit scoring, and with the qualified digital signature certificate, the customer can sign the contract, and we can disburse runtime on the one single stop procedure. We can disburse the money for the customer. Just to present you which are the different role and different level of trust, we just prepare a role mapping. So we have, this is an example of the different role in each phase that needs for eIDAS services. So on the form filling, we have the signature for sure, about the loan manager. From the loan manager, we have the time stamping and qualified web access certificate that could be potential, not mandatory, and the signature by the borrower and the guarantor. How you can see is a trusted chain in all the phases that can enable a trust along all the process. And as you see, there are all the eIDAS services along each phases of the process. Just to pass through the benefit, in this case, using facts and numbers coming from a third party's auditing performed by a main international IT consulting firm, the to-be process is changing the time to cash from 13 days. Before, it takes 13 days to a customer to have the disbursement of the personal loan. in a process that it takes just 10 minutes. So online, 7 days a week, 24-hour days, a customer in 10 minutes have been identified, signed the contract, and receiving the disbursement without any paper, remotely, without going in the branch office. For the bank, for sure, the ROI of the investment has been tremendous, because the ROI was 260% due to the fact that we reduce costs for sure, because we eliminate paper, we reduce the branch office, but even for the new customer, because we enable for the same process the bank to reach a new customer abroad that was not reached before. The payback period of this kind of project, so the implementation of this kind of eID services, was 3 months, with an increase of personal law of 100%, and this is even more important, the reducing of the customer renouncement rate, because you are online, runtime, 10 minutes in one single stop procedure. It's difficult that the customer abandon or close. It happens frequently when you have a paper-based process where you have to print out the contract, sign with signature, send by post. You have a lead time where the customer can rethinking about the purchasing, stop the process, and don't perform the entire process. Here is a one single stop process, so the renouncement rate go down by 80%. And as I told you, and I think the most strategic benefit was new customers, so reaching new segment of the market, new geography that are enabled by the fact that the process is remote, online, and paperless. And for sure, as you have seen, all this process was think and conceived thanks and leveraging the eIDAS services. So it's not a matter of be compliant with the services, but just to benefit from the this kind of regulation. So going forward, another case I would like to present. In this case, we are speaking about the Slovenian branch of an international banking group. In this case, was just a digital onboarding. So what was interesting here, that we use the eIDAS services to perform the anti-money laundering, so collecting all the information for the anti-money laundering, and sign the contract. So it's exactly the sample I give you before, where we have to match the eIDAS and QTSP services with the Know Your Customer procedure. So in this case, the Slovenia AML regulation allowed to have a video identification, and the banks, thanks that there was a player such as that we are under the umbrella of the eIDAS, and we are a QTSP provider, was confident to give and outsource to us all the activity for the video identification in the AML, local AML regulation. So in this case, we act as a certification authority, as a QTSP, to perform the identification to enroll the qualified certificate for signature, and in the same time we collect all the information needed to the bank for the AML. So in this case, more or less the same. There is an information providing phase where we fill in the form. There's always a video identification, and with all these proof of evidence, we enroll a qualified certificate. With this, the customer can sign the contract and open the banking account. We give all the information to the bank, and we perform, thanks to all the information collected during the video identification, we perform all the activity for the AML procedure. So for the bank, what the benefit is outsourcing completely this activity, having the trust of a qualified trust service provider. Even in this case, we have a role schema that is different because it's different, the responsibility schema and what we do. In this case, the responsibility of AML remain on the bank. We have the responsibility for the identification as a QTSP, and we simply pass through all the information needed to the bank to perform the AML. There's always, as you can see, a chain for trust in all the phases. So there are in all phases, you can see that there are signature, timestamping. For example, on the form filling, we have the e-signature of the account manager. We use timestamping, a QUOC as a potential user to certify the website where the customer land. And the applicant use the signature to sign the application form. In some cases, it's interesting because it's a potential use. So it means that you can fine-tune the level of trust you need. It's not mandatory. It's not a question to be obliged to use these services, but it's an opportunity if you want and trust and having an enforcement of the process you are implementing. In this case, we had for sure an increase of signed customer because all the procedure was online, remotely, so easily for the customer to access. This is an example of a smart service process enrollment. Relevant things that we ensure a very relevant fraud rate reduction because we collect all the proof of evidence remotely, is the photo, the video, the IP address, the MAC address, all the information that we can collect in a digital process compared to a physical process where you have just a copy of the ID card and just the paper contract signed. So in this case, we have a very relevant fraud rate reduction measured on the last 1.5 million of remote identification we perform. The payback period was 1 year with a strong cost reduction because was in this case an 8 million procedure because there was not the risk evaluation on the banking side, but just the onboarding, identification, and signature. With a smart user experience because all the experience was digital, remote, and with a strong reputation for the bank to positioning their services and differentiate the services they are providing to the customer. Even this, as you can see, is such a case that was enabled by the services defined in the eIDAS regulation. Well, the last one, in this case, it's interesting because we are speaking about an Hungarian branch of an international banking group. In this case, they asked to collect all the information for their KYC procedure. So what we do, we not just act as a QTSP to enroll a qualified signature certificate, but we even collect during the procedure all the information that after we pass through the bank to perform the KYC. In fact, in this case, we perform all the image validation and the OCR recognition on the ID card, passport, identity document. That is an operation not needed for us, but just asked from the bank to perform the KYC procedure. And we even go and verify some information in a public and official database. In this case, there was a public database, GRINFO, where we can find some information about the customer. And so in the same online and paperless procedure, we perform even the collection of all the information for the bank. Always we have all the phases of the procedure. The customer select the product, we validate the document, we identify and perform all the KYC activity. We issue the signature and opening the bank account. So we have seen these three cases. That was an example of implementation of eIDAS solution. Always in this case, we have a role schema where you can see the trust chain is always assured thanks to the different services defined on the eIDAS regulation. In this case, as I told you, we can outsource a part of risky and relevant banking activity thanks to the liability and trust of the procedure defined in the QTSP perimeter. So a QTSP is a player that can give to the bank the trust to perform outside the bank some of the activities that are more core to evaluating the risk of the customer. So just to complete, we have a lot of compliance coming, as we told at the beginning, and we have a needs from the market. So we have on one side a compliance that we have to respect. So the AML6, PSD2, GDPR, AML5, and local regulation. In the other hands, we have seen all the challenge and pains that we have to answer as a financial institution, as a bank, to innovate our services. What's in the middle that can connect these two aspects? We think that there are all these trust regulations, so the eIDAS regulation, that enable financial institutions to innovate their services. So the eIDAS regulation is an opportunity to answer to these business fits, and it's not something that we have just to comply with, but it's an opportunity to innovate. You need for sure technology expertise and knowledge. There's the need for attention and capability to re-engineer and having a deeply innovation of the banking process. And you have to know all the opportunity enabled by the regulation. So you need strong capabilities in legal and compliance. Fitting these three competencies, we think that we can reach and join the business needs with all the compliance evolution that financial sector is living at the moment. Thanks to all. For any question, please submit your question, and thanks for the attention to all the participants.
Thank you very much to Chiara and to Marco for two very interesting presentations. We're going to go into the questions in a moment. There are quite a number of those, so we'll endeavor to answer as many as we can. Otherwise, as I said, they'll be taken offline afterwards. I'd just like to mention also that the information that we do have available is available in 4 languages: French, Spanish, English, and German, to suit the local environment that you're in. So we do have lots of questions. I'll take them by order of when they were asked. So the first question I have is, do individuals have to register for things like e-signature before we can use them? If so, how do you get them to do that? How easy is it for fraudsters to register as someone else? Chiara, I thought that might be yours. A lot of interesting stuff there.
Yeah, sure. Thanks, John, and thank you for the question. Normally, if a user would like to use an e-signature, they would have to provide their identity to an e-signature service provider. So in this case, this would sort of answer your question as to whether they have to register. So in a way they would, and the e-signature service provider would have to verify the identity of the user. So that would also answer the second part of the question with regard to the fraudsters registering as someone else.
Right, thank you very much. The next question, thank you, is rather long but actually incredibly interesting. For the case of remote digital onboarding, and this is for Marco, I think. For the case of remote digital onboarding, leveraging eID and possibly other trust services, while they're common requirements for KYC and AML, the details differ from country to country. Set Black in Spain and BaFin in Germany. What's your views with regards to further harmonization so that these actual requirements will start becoming similar as well, on top of obviously the eIDAS, but each country's requirements for AML and KYC? Do you think they'll ever harmonize? Marco.
Yes, so what we can see that's for sure a process of convergence and standardization at European level. There is the European Supervisory Authority, ESA, that is defining opinion and guidelines for the KYC. And so we can see that there is a convergence. For example, the new directive, the ML5, is introducing the remote identification, and it will be for all the European countries. At the moment, for example, each time that we suggest to our customer using the remote video identification, we have to evaluate the local banking regulation, and sometimes meet the local regulation, present the process, and convince them that the regulation is fit with our solution. So what it means that eIDAS regulation defines the standard for services. After, there are for sure still local flavor on the implementation, and on this we need to go deeply and understand and customize the procedure, the solution. But for sure, more and more we are converging at European level, and more the market is defining some standards. So the regulation authority will collect this standard. Now at the moment we see that video identification is becoming a standard, and the ML5 collect this standard, implement the standard. So I think that in a very short term we can have an harmonized market.
Thank you very much. That's great. Sorry,
just to add, this is Kira, just to add on top of that, there's also a PwC study that is trying to, that is looking at the common attributes between identity requirements and KYC requirements. And also the European Commission has set up an expert group that looks at eID and KYC to see how identity attributes and KYC could be exchanged electronically through financial services, as this currently remains different amongst the member states since it is under a directive. So just a little add on there.
Thank you very much. We have another question at a more basic level, I guess. How do you validate an eIDAS certificate? How do I remember? Are legitimated use, and how are they legitimated in their use by SMEs and when they are presented to financial institutions? So in other words, what's the validation process for the eIDAS certificate? Marco, do you want to do that?
Yes, well, for sure, for all our procedure, we have a validation by our local supervisory body. In specific, for Italy, we have AGID that audit and verify all our enrollment procedure. So if you go on the website of the local supervisory body, you can find the CPS where all these procedures are described, evaluated and approved by the regulator. This is the formal way, let me say, to validate the procedure. After, for sure, we have our internal audit and our audit track, where we can evaluate the strength of the procedure based on numbers. As I told you before, recently we make some ratios about fraud rate on our identification, and we have a very low fraud rate that is 0.02% of fraud rate. In Italy, from the Italian banking, is considered normal as 0.6% of fraud rate. So we are speaking about 30 times less than the identification on a face-to-face. Let me say, this is not a formal audit, but for us it's very relevant to present this result and say this procedure passed the test of reality check that we do with 1.5 million of the remote identification that we already performed.
Thanks. Actually, I think the question is also with regards to validating the certificate itself. Is there a validation? How do you actually validate a qualified certificate, eID certificate? Marco?
Sorry, can you repeat, John? I have
Yes.
some.
Sorry, the question was a little bit about also validation of certificates themselves, the mechanism of that.
Well, the validation of the certificate respects the procedure that we define. So after collecting all the information that are defined on our procedure and respect the ETSI standard, we can consider perform the procedure, and so the operator that is enrolling the certificate can enroll the certificate based on this standard, and the certificate respect the standard defined by ETSI. So thanks to this, we can consider the certificate as valid. And after the signature, we have the validation on the document. So once you use the certificate, you can verify the certificate if it's valid, if it's contain all the information, and if the certificate is valid. So in all the phases, enrollment, emission, so the standard of the certificate, and verification of the certificate, you have all the information to verify the validity.
Thank you. I have another question specifically about the KYC and the Know Your Customer and AML. And it says, how do you get go from identification to credit scoring if you don't have access to account data? I think that's a very specific question with regards to your last slide, Marco.
This is very interesting because oblige us to have a very deeply and strong integration with banks. So what we do is having a jointly design of the process where we define all the detailed information they need, and we integrate the system to provide them all this information that after they use and they run to having a runtime credit scoring. So it's not us that we calculate and we manage the information to having the score, but we enable them to having all the information runtime. So what we do is collecting the right information, provide them at the right format, and putting this information on their system. And so they are enabled to calculate runtime the ratio and the score. So the bank access on the information using our platform. It's a question of integration. there's a strong integration behind.
And I guess you should always remember that the applicant has got an interest in providing the correct and right information for credit details as well. So, because it's their interest to get it right. Thank you, Marco. I now have a question for Chiara. Why local authorities do not have the same level of requirements to register eIDAS related solution providers? It creates a distortion of competition within the EU, I guess, between the local authorities and financial institutions, I guess. Chiara, do you want to make a comment on that?
Yeah, sure. I'm not sure if I completely understand the question, but just on the different levels of requirements, the eIDAS regulation clearly sets out the different requirements of qualified and non-qualified trust services. So of course, a service provider can choose whether they would like to be qualified or not. And this is completely their choice and up to the market. So yeah, I mean, that's all I can say, unless there's something that would clarify the question a little bit more.
If you'd like to, would the writer like to clarify a bit more with a question and with another question via the chat, and then we'll try and answer that offline at the end, because we do have quite a few questions and very little time, because we will be winding up very shortly. The next question is with regards to LEIs, which is the registers of companies. Considering LEI offers businesses a one-stop approach to identifying legal entities, do you think generalization of the use of the LEI in the KYC process complements the eIDAS and its main goals and objectives? Marco?
Yes, so it's correct, and thanks for this question, because let us to introduce these topics about the LEI, where we are working on for sure, and we are verifying that is exactly a similar process of data identification. So we can enable this process to remotely, and in fact, we are on the path for certifying our procedure to the GLAIF authority, that is the global authority for lay enrollment. And for us, there's a perfect overlapping and convergence of these two procedures. In fact, we want to leverage our, let me say, QTSP role to expand all these trust capability that we have to enroll a very smart and effective lay services enrollment.
Thank you. I think we have time for one very quick question, and then we have to wind up because it's coming to the top of the hour. The question is, with a valid eIDAS certificate, is there any additional KYC mandatory for banks? I'll let you answer that as well, Marco, because you had presented these cases. Marco?
Yes, I mean, I'm sorry, to better understand, you mean if we need more authorization or mandate from the bank to perform the KYC? Is correct?
Yeah, it's to say, why isn't eIDAS enough for the KYC?
Well, because KYC is still locally regulated, so there are different flavor of KYC, and there is different type of information that banks and financial institutions collect. So it's not standard following the local regulation, and let me say even following the local level of risk that the single bank won't take in account. So it depends from the local regulation and from the risky propension of the bank. So you can have more or less information. But on this track, we will have ML file that will harmonize this, because ML file define better what is needed for the anti-money laundering regulation.
Thank you very much. I'd like to thank everybody, the speakers for coming, and for the attendees. We've gone through a lot. I apologize. There's a lot of questions that haven't been answered, and we'll try to get back to people on those. I'd like to say that thank you. We have our next webinar on October 25th at the same time, 1300 CET, on the benefits of eID and trust services in the online retail sector. Thank you very much. More information is available at https eceuropa.eu and Digital Single Market Discover eIDAS. Thank you very much indeed for coming. Thank you.